Hi, I'm Mark Jackson and welcome to the very first edition of Wolfpack Business Insights. The purpose of this regular video blog is to impart business skills, tricks and techniques, insights, mindsets and other useful gems for running a business. We'll cover everything from marketing and sales to strategy to leadership and management. We'll talk about the common mistakes and pitfalls and how to avoid them. Importantly, we'll keep these blogs as short as we can, under 10 minutes, even shorter if the topic allows it. Business Insights is intended for business owners, but can equally provide value to anyone running a business or business unit. The cost? It's free. You only need to join our email list. Needless to say, we'll respect your privacy and your inbox, and we don't give your email address to anyone else, and we won't contact you unless you request it. Which brings me to this first topic. In this first video blog, we'll be talking about the numbers, the financial model of your business. Every business owner needs to understand just how their business works financially at the highest level. So this is a good place to start. Many quite large businesses haven't done this simple 10-minute exercise. We've made no assumptions about spreadsheet skills, so we keep it really simple to make this topic accessible to a very wide audience. For those of you who are more sophisticated spreadsheet users, hang in there for just a few minutes because we'll quickly get to some very powerful insights you can immediately apply to your business, and even more powerful ones in the next topic that build on the material of this topic. So welcome again, thank you for watching. Please give us feedback and suggestions for future topics, and please forward this on to anyone whom you think may benefit. What I promised to do in this video is to show you how to build a financial model for your business. It's basically a spreadsheet. So it's really important to have a financial model so you can understand the various drivers of your business. You're going to see how simple this is going to be, and I'm going to show you how powerful, and not only powerful, but it's really necessary. I'm going to use an example of a Wolfpack member who came along and they said, you know, we work really hard, but at the end of the month, after everyone's been paid, there's nothing left in the bank account. What are we doing wrong? And this is a really common story. We see this in businesses a lot. So let's pull up a little spreadsheet here. Now I'm using Excel, and we're going to call whatever it is you do widgets. Now you might sell something, you might sell shoes or whatever, or you might sell a service. So you might be, for example, a tax accountant, okay? In which case, someone comes to you and says, look, I want you to do my business tax return. What does it cost? Maybe $3,500, something like that. Then your widget is doing that tax return. Yep. Or it might be a long-term contract, in which case that sale becomes your widget. This is going to be an annual business. But for the purposes of the little example I'm going to do, we're going to go back to that shoe business. So a pair of shoes, and so in business terms, if we say the price, that's what you sell it for. And to keep things simple, let's just say they sell shoes for $200 a pair, or the average price. They probably had different types of shoes, but let's just take an average. Now, they manufactured those shoes, and that manufacturing, of course, had a cost, and fully shipped to the customer, manufactured and shipped to the customer, the cost per pair was $130. Number of shoes sold, and hey, business is always going to come down to sales. I'm going to put that in as a 0 for the moment. Overheads, these are the costs in your business independent of the direct cost of manufacturing those shoes and shipping them. So the overheads, let's just imagine in this little business, are $50,000. One thing I like to split out when talking about overheads is the owner's salary. Now it is an overhead, but for a whole range of reasons that I could spend an entire log talking about, go with me here, separate that out. And let's put in a salary which would be considered perhaps average in this part of the world. So those are the basic inputs to the business. Now, on this side, we're going to put all the calculated values. So the revenue, that's the total amount of money in this case, we just say it's the price of the shoes multiplied by the number of shoes sold. Because the number of shoes sold is 0, that's currently 0. The cost of sales will total, and by the way this is per annum, is the cost of the shoes multiplied by the number of shoes sold. Just to explain cost of sales, your cost of sales are your direct costs of earning that revenue. So all the costs of, in the case of our Wolfpack member who manufactured the shoes, of manufacturing the shoes and shipping them to the customer. And that was the all-up cost. So that's your cost of sales. All right. So gross profit. That's your profit before overheads and your salary. And it's quite simple. It's simply the revenue minus the cost of sales. So then you've got your overheads, and your overheads are the overheads not including the owner's salary plus the owner's salary. Right, and finally that's going to leave us with an all-important profit, which is the gross profit minus all the overheads. And you know what, I'm going to colour profit because it's all important. We need to keep our eye on it. All right, so then we have a very, very basic business model. Now, at the moment, of course, the business is not selling any shoes, and of course we're going backwards by the total of our overheads. So let's start selling some shoes. All right, so let's sell 1,000 pairs of shoes. So there you go, $200 a pair. On average, your revenue is $200,000. But notice our profit is not looking too good because the gross profit being $70,000, it's covering the $50,000 worth of overheads, but it's not actually contributing very much to the owner's salary. Right? If we drop the owner's salary to $20,000, well then we'll break even, but we're not making enough salary and we're not making any profit. And by the way, that reminds me, a question I often get is how much profit should I make? Well, you know, the easy answer is as much as possible. But as much as possible is not a target. You know? How do you know when you've reached it? A rule of thumb I like to use is to say that the profit should be at a minimum of 10% of your revenue. So in the case of this little business here, selling 1,000 pairs of shoes with a revenue of $200,000, the profit should be $20,000. So given that the overheads are fixed and the owner's salary is fixed and those things are fixed, let's ramp up the number of sales and see what that's the profit. So I'm going to double the sales from 1,000 to 2,000. And all of a sudden now we are making a modest profit. But the revenue, of course, has gone up to 400,000, so the profit is still nowhere near 10%. So let's try bumping the sales up a little bit further, 2,500. And now the profit's getting a little bit closer to 10% of the revenue. Notice the profit's nearly 10%. So maybe let's tweak that up just a little bit more. And there we go, bingo, we're now at exactly 10% of the revenue. All right, so nice little business. It's paying the owner a salary, it's covering overheads, and it's making a modest profit. All right, now in Wolfpack, we use a slightly more sophisticated model because in a lot of businesses, the cost model is slightly more complex, but we really want to keep this to make the point. So what can you do with this model? Well, first of all, you know what your salary, you know what kind of salary you need to take home to maintain your cost of living. You're making a modest profit. You at least now know how many pairs you need to sell. And why do you need to make a profit? Well, there are thousands of reasons, and let me just give you one. Let's just imagine you have a bad year and you sell only 1,500 pairs of shoes. Suddenly your business is significantly in reverse. So for that reason, along with many others, you need to make a modest profit, and ideally a whole lot more. That's our basic business model. In my next log, I'm going to use this model to do some sensitivity analysis. Now that again sounds a bit scary. It's not. It's just changing things to see what happens. And it will show you what are the things you need to watch and what are the things that you need to pay attention to be successful. So looking forward to that. We'll get this out soon. And until then, all the very best.